Hi, everyone. Welcome back. Thanks for joining us today to discuss the mid-December performance of the HFRX so far with President of HFR Index, Ken Hines. Hi, Ken. Welcome.
Hi, Nico.
So, Ken, why don't you kick us off? How has the month of December progressed so far?
Yeah, it's been an exciting month of December, a little bit less exciting than November, but I think that's okay. November's a little bit too exciting for everything. But it's interesting that gains across the hedge fund industry have continued in December, even as some of the equity, the really strong equity gains, have lost momentum in the first half of December. You actually have a decline you have mixed performance across equities. What we show here as large cap equities, the US, have actually declined. We've continued to see gains really across all strategies, across all hedge fund strategies, and those led by equity hedge, which is led by equity hedge and macro, which is interesting because we've seen mixed equity market performance and higher interest rates thus far in the first 2 weeks as people position for the new administration and new policies and all the change that they're expecting in 2025. That's what we've seen thus far in the first 2 weeks of December.
Okay, so what has been the top performing strategy in the composite indices?
So you can see here through mid-December, the leading area is macro and equity hedge. Macro actually being the leading up about 1%. And that's interesting. Even though there was tremendous gains for equities and crypto in November, and those really kind of continued into the first part of December, a lot of those have reversed as people are kind of positioning for very uncertain policy environment in terms of how much are new policies and tariffs going to impact business. And there's lots of questions about what this is going to mean. We've seen a decline of about 2.4% for U.S. equities. It's been a mixed picture, though. Large cap and small cap decline. Technology, S&P generally higher for the month. But as it pertains to macro, that's really kind of been driven by all different types of assets. Mixed performance across commodities, so not a real strong source of gain there. Gains in the dollar, but really I think the fact that you have bond yields higher as a strong driver of performance in the macro space, up 1% in the first half of the month, gain about 0.5% for equity hedge, 0.5% for overall index, and then smaller gains, 1/3% roughly in fixed income based relative value and event driven at the strategy level in the first 2 weeks of December.
And does the picture look much different at the sub-strategy level?
I think you even see it even more enhanced looking, drilling down one level deeper. You can see that it's the quantitative systematic trend following managers, actually the leading area of performance. And as you think about the whole year, this has been a mixed bag. There's been months, this has been very much of a negatively correlated leader. It's been a negatively correlated laggard. It's been uncorrelated. It's really been across the board. But in this particular month, negatively correlated leader with equities down, this area's gain. Again, I think that has as much to do with short equities as it does short fixed income in this rising yield environment we've seen in the first 2 weeks of the month. 1.8% gain for the macro systematic diversified. Fundamental growth, again, interesting that we have a 1% gain there, 93 basis points in an environment where that follow through from the strong November as far as growth equities has weakened in the first 2 weeks of December. So still seeing strong performance in hedge funds investing in fundamental growth equities. Equity market neutral, again, we've talked about this before, really a mean reverting, something as you see things revert from wide dispersion after periods of dislocation. We see those things normalize to historical relationships between equities. That's when equity market neutral generally does well, very low or minimal or no beta at all to those strategies. So a gain of about 0.4% there. Similar for convertible arbitrage. That obviously no long bond, long volatility, short equities is the categorical exposure there. gained about a third of a percent in the first, and that's been a strong performer throughout the year. And then finally, fundamental value. Again, that's probably fundamental value is categorically more similar to large cap equities than, for example, growth equities, which are not so heavily part of the US equity index that we show here. So it's interesting that you see a gain, even it's not a real strong gain, third of a percent, but in an environment where we have seen equities decline, that's impressive.
Looking at the year-to-date performance, how do the composite strategies look? Strategy indices.
Yeah, this is our last update to index performance before it's all final in a couple of weeks for the year. So it's been a strong year. Obviously, we saw a really strong gain for U.S. equities. A lot of that happened in November. Some of that has been given back in the first couple of weeks of December. But leading area equity hedge, 8.8%, 5.75% for the overall global hedge fund index. 5.5 for fixed income based relative value has been very steady, as you know. We talked about macro CTA. Again, it's been leading and lagging at different points over the year. Right now, it's up 4.5%, and then 3.5% for event driven, which I think we've talked about previously, was really sort of slow out of the gate. The first part of 2024 was pretty weak performance in that space. But I think coming into the end of the year, you've seen strong gains, and a lot of people are very optimistic about how the cycle in event-driven and M&A, especially when situations investing, looking into the first half of 2025.
And then finally, at the sub-strategy level, year-to-date, how are we judging the performance so far?
Yeah, and this probably has changed even a little bit less because we've consistently seen these areas leading in the in 2020 throughout the year. Fundamental growth, again, we commented on that earlier because it was a leading area of performance in December. 10.6, 10.7% nearly in thus far for the year. So that really being a leading area is interesting. Again, those equities obviously did well in the month of November, not so much in December. So we're still seeing strong gains there. We talked about convertible arbitrage, 8.2%, 7.9% in fundamental value. And all these areas, the leading areas for the year, really the leading areas for December, we commented on those earlier. Equity market neutral, 7 and 765. And then nearly 7% in macro discretionary thematic, which interestingly enough, sometimes performs very similar to what quantitative systematic strategies. Sometimes it performs in a very different manner. So you can see here, even though the quantitative CTA strategies were leading in the first half of December, it's the fundamental strategies that are leading area for the year through the middle of December.
Okay, that wraps it up. Any final thoughts before we close?
Yeah, obviously, if you're watching this video, and hopefully you know, if you've seen the previous ones, you know that we do regular performance commentaries on our YouTube channel. Please subscribe to the channel, and if you have questions of topics you'd like us to touch on in future performance commentaries, we're happy to do that. Please, we've got the new website. We had a lot of great feedback on the new website and all of the features and analytical capabilities there, www.hfr.com. When you do visit that, you can click on and download the investor guidebook. It's got a lot of great information on how institutional investors are using all of the investable indices that HFR publishes. And then, of course, if you have questions on anything that I've talked about here or anything I've not talked about here, anything you see on the website, the investor guidebook, you can set up a call with me, Ken Hines. You can reach me at my email address or whoever you correspond with at HFR, or just send an email to indices@hfr.com, and happy to set up a time to speak. Thanks, and we look forward to, I guess, the next video will be in the new year. So have a great holidays, and we'll speak with you in the new year.
Thanks for joining us.